What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Good morning, everybody. Hope you're all doing well. Happy Wednesday to you. Happy hump day, as they say. Hope you guys are doing well. Markets, interesting little development here. It is actually pretty amazing. It's pretty resilient out there in regards to how you still have, the market chasing the what some are calling the taco trade, the idea that, we have consistently seen a very similar story for a while. Well, yesterday the news broke that the White House, Trump specifically giving the ceasefire an extension in efforts and hopes that some kind of offer from the Iranians would come. And we'll see. But I do think that time here passing without any sort of ceasefire or response from Iran starts to make things a little bit more wobbly. Though I think possibly what's going on here is that the Iranian side may not or may know that, there's no interest in actually knocking out power plants, etc., from the US. Now, it could still happen, but unfortunately, I think that's kind of what's going on. There's like a little bit of a who's going to blink first in this negotiation type thing. But yesterday we saw some intraday moves lower, some concerns around, the U.S. Vice President J.D. Vance not leaving for the Middle East for negotiations. And so markets kind of freaked out, but then the extension of the ceasefire on the U.S. side, or at least postponing of military action, seems to be causing the markets to still stay flat here. We also did have some earnings that I wanted to maybe talk a little bit about. Just a quick one this morning. I wanted to show off this feature I was playing around. I took a trade yesterday, a short put trade on ISRG. If you're unfamiliar with short puts, selling puts rather than buying puts or buying calls. When you're selling puts, you want the stock to go nowhere or to move higher. Well, I sold puts on ISRG yesterday, which is an Intuitive Surgical. It's a robotic surgery company. And they came out with a really good earnings report. And I wanted to show you guys kind of what the tools here that we've got in regards to stocks can be used for. By the way, good morning to everybody. There's a lot of warm welcome messages. Thank you for being here. So I'm going to switch over here. I'm going to do something on ISRG, which is a stock that I like. I wanted to talk about it because it's been moving lower here recently. I know I don't usually talk stocks, but I just thought this was a really good example this morning. So Intuitive Surgical, they reported their earnings last night. And when we scroll down to our earnings report card here, check this out. So Stockbox gave this an A+ rating. Intuitive Surgical reported Q1 revenue of $2.77 billion, which is up 23% year over year. Non-GAAP EPS of 2.5, both significantly beating consensus estimates driven by strong procedure growth and platform adoption. A+ report card here, really strong earnings report, and forward guidance also strong. They raised outlook in regards to their forward expected earnings. They also, key takeaways, continued global procedure adoption. Their DaVinci products procedures are up 14%. Ion, they're plus 37%. So recurring revenue at 86% of total revenue, which is great. Again, company I like for the longer term, and is also trading on sale right now. So I'm just sharing my thoughts here. We also, when we look at our valuations, right, our valuation metrics are all, for the most part, most of them getting undervalued readings relative to their 3-year average histories. So I'm just showing you this because when it comes to, Edgefinder, many people are familiar with kind of what Edgefinder is doing for indices and commodities and currencies. But what's nice here about Stockbox is that if you're someone who is interested in stocks or options, we're trying to build out. I mean, we've got a really cool product here, and it's only getting better to continue to build this out on the stock market side of things, looking at valuation metrics, looking at analyst ratings, looking at, price to earnings, forward price to earnings, all sorts of different metrics that we're studying here. Another reason I really like ISRG, very solid revenue grower and earnings grower. Price to free cash flow is high, like it's an expensive stock, but for arguably good reason, and also is trading at a lower cost than usual. So yeah, let's not forget to put the thumbs up for Nick and team. Thank you very much. I appreciate that. Yes, please hit that thumbs up button. And yeah, so Stockbox, I'm really excited about it. I've been talking about it a lot on my secondary YouTube channel, but today I thought that was a good example of a trade that I took with the help of Stockbox. I sold cash secured puts. Stock, has moved sideways, and post earnings, that volatility crush is likely to be a very positive thing for my short put position. Anyway, stocks as a collective group, however, are still looking very extended to the upside. I reiterate what I've said 1,000 times on the channel. I'm not looking to short this thing. I'm not looking to bet against the stock market, though I would say that I think it's a little overextended here, both from a price action perspective, because look at this, right? From a price perspective, we've had pretty much just three to 4 weeks of straight upside move. I think it's very possible that you get some kind of a pullback. But the other reason is that I think the risk reward here is not great, in the sense that if you get something geopolitical that does not look great, the other one that kind of threw markets into a headspin yesterday was comments from the Fed nominee, Kevin Warsh, who sounded kind of hawkish. And again, I'm not gonna lie, I actually think I think I like Kevin Warsh. Like, I think he's a good pick. Very smart dude. Listening to him speak yesterday about wanting to cut interest rates, but also limiting the Fed's balance sheet. I thought that was a very, very good take. Like, when you listen to him talking about cutting interest rates, but simultaneously reducing the Fed's balance sheet, and that, the Fed's balance sheet was only ever meant to get so large in emergencies like 2008, which he played a big part in helping with. I look at that and I say, okay, that's a Fed chair that sounds reasonable to me. Lower interest rates helps the lower end of the consumer, and the higher end of the consumer, but cutting the balance sheet is in some ways kind of a tax on the rich, right? If you think about it, because let me explain. If the Fed's balance sheet shrinks, if they reduce their holdings, if they stop buying mortgages and bonds, et cetera, which is liquidity buying the stock market by proxy, right? Financial assets tend to do well. He discussed that yesterday. If you slow that process, a tax on the rich, how do you tax the rich? Well, one of the quickest ways, who owns stocks? Rich people, right? So if you want to tax the rich, quote unquote, reducing the Fed's balance sheet, playing a lesser role in buying every little dip, the stock market could come down. And with that freed up stuff, you could maybe lower interest rates, which would help lower end consumers, credit card debt, buying a car, buying a home. Like, I vibe with it, to be honest. I'll say it. I like Kevin Warsh. I think he's a good Fed nominee. I think he's going to be a good Fed chair. And I know a lot of people will say, "Oh my gosh, he's just going to be a Fed puppet or a Trump puppet. He's going to do whatever he says." I don't know. I don't know. Listening to him speak, I think he's a very smart dude, and I think he's logical enough and smart enough and has experience enough to know that you can't just go into a committee, which is a democratic approach to interest rates, and just strong arm that you want to cut interest rates if that is not the correct thing to do. The bond market will revolt, and the people that you share the table with at the Fed will also vote against you. You can't just come in and cut interest rates dramatically. So I think he's a smart dude. I think he actually is going to be a good Fed chair. You have to be unbiased and diplomatic to be a Fed chair. You do. Like if you do not, the bond market will absolutely revolt against you. Like you can't come in and just cut interest rates dramatically. And he knows that. Like he's much smarter than I am with financial markets, probably smarter than all of us in terms of financial markets. I got the Edge Finder. The stock box will be my next purchase this year. I'm starting to see fundamentals run the markets, and I'm loving the tools from A1. Thank you so much, King of Kings 864, for the $5 donation. That's going straight to the coffee fund, as always, with stream donations. King of Kings, if you have any chart requests, if you want me to look at something for you, please feel free to drop that comment, and I'd be happy to take a look at a chart for you just as a courtesy. Thank you very much for the $5 donation. Nick Trump will hunt you. I mean, anyways, yeah, I think that I'll say it. I think he's going to be a decent Fed chair. Just like I liked Powell. I mean, I honestly thought Powell's pretty good Fed chair too, given a very difficult 5 or 6 years. Both I think are loyal to the Fed first. And I think that that's the way it should be. Anyways, yields have come down a little bit, but poked back up yesterday. We had some good retail sales numbers. Let's see. I did take a long position. So I've been in a funk here, man. I've just been struggling to find a lot of trades. Well, yesterday I found one. Yesterday I got long copper, which is a new trade. I haven't traded copper. I can't even remember the last time I took a trade on copper, but I went long yesterday, copper on a pullback. I've got this position on. It's not a huge position, but I am looking for momentum here. I'm looking for follow through. We broke through this level here of resistance, right? Nice little breakout, brief pullback here. And I went long with a stop relatively tight. I'm looking for a move higher on this. I traded CPER. That's the ETF that I'm long, just in the US. I could trade futures on copper, but I just prefer to trade ETFs. It allows me to pick and choose my spots a lot more specifically. But I think that copper has room to the upside. I like copper for a couple reasons. And check this out. So if we go take a look at our summary here, let's go take a look at copper. Copper plus 10. So we have a plus 10 score on Edge Finder. And when I look at the very bullish reading overall, plus 10 score, where are we getting this from? Technical score, plus 3. So technicals look solid, 4-hour and daily chart uptrend. Seasonal trend looks good this portion of the year, April specifically. COT positioning is very bullish. Institutions are long. COT latest buys and sells. This is the week over week change. Adding to copper. We can see this also, by the way. Let me just show off this new COT chart we've been working on. COT velocity, man. I feel like this is the most popular one on Edge Finder right now. I'm getting a lot of people saying they really like the COT velocity tab, and I'm thrilled about it because it's like the simplest thing in the world, and yet sometimes that's what people like to see the most. So I love it. So check this out. Copper, week over week, big shift, big bullish shift in that. Copper on the 1 month change, nice little accumulation going on. Same thing with the quarterly. So what we see here is copper futures being accumulated by institutions on the long side over the last week, where they really accelerated it month and quarter. Kind of cool. Nick, will you ever add Ethereum? Yes, probably so. So if I go back to my asset scorecard, Let's take a look here. So yes, copper, I like the jobs market bias looking healthy. Remember, copper is in everything. It is an industrial metal. In the environment that you see economic expansion globally, copper would tend to do well in that circumstance, especially if you have kind of a sticky inflation environment, right? Commodities can do okay in a higher inflation environment. However, that's a longer term view. In a shorter term fashion, cooling PPI, or kind of a 4% sweet spot where you do have higher inflation going on, but you also have lower than forecasted inflation. That's kind of the sweet spot for commodities. Commodities love a little bit of inflation going on, but not a scary amount of inflation jumping expectations, because then the Fed will jump in and hike rates, et cetera, which hurts, precious metals and commodities, et cetera. So I really like the macro setup for copper. Economic growth bias, like those retail sales that came in yesterday, that's good for copper. So I think you have a supportive macro setup for copper longs. Institutional activity is very bullish. Technical bias is bullish. Only thing here is that the crowd is kind of chasing the trade a little bit, myself included, which I think is okay. Like sometimes you're going to be trading with the crowd. That's perfectly fine. Sometimes the crowd is right. Again, sometimes people like to dumb down or simplify their analysis to the point that only one indicator is, all you need to look at. But for me personally, I like to look at the collective and scorecard it all out, like we just did with the feature that I just showed you, the asset scorecard, which automates this whole, component of looking at technicals, COT, crowd sentiment, macro fundamentals, etc. And you can actually see the score has been rising the last few days, but really started to get bullish in early April. I've not been in the trade. I wish I was. Early April is over here. Like we've caught this bullish drift here in Edgefinder in April. So I may be late to the trade, and if so, then I'll cut the trade, take a loss. It's a defined risk position, but if we do have, a follow through move to the upside, that's what I'm trading for, right? I'm trading for the momentum breakout. If I don't get it, I take a small loss, move on to the next. Hello from England. Hey Josh, thanks for being here. Tom wants to look at the DAX. Yeah, let's take a look at the DAX. Why not? German 40. Let's see. DAX getting a +5. So the DAX is getting a bullish rating, although I have to say I prefer US indices right now. But from a technical perspective, let's just do this. DAX has kind of been in a range. If you're very bullish thinking it can continue, then maybe you're looking at like pullbacks here, looking for that kind of next leg higher. If you're more conservative, waiting for a technical breakout, could look for this to get broken to the upside. But I would lean bullish on most indices right now, including the DAX. Although, would I choose the DAX? No, I would choose probably the S&P or the Nasdaq or the Russell. I'm also taking a lot of long positions via really short put positions, which are bullish positions in the options market, specifically on stocks that I like. So I think that the setup here is supportive for risk assets until proven otherwise, right? Something changes, we change our view. A superpower in trading is just following the trend, not just the technical trend, but the macro trend as well. And so if the macros change, right, if this outlook on risk assets starts to materially worsen, no sweat off my back, right? I move on and I adjust. Could you check gold too? Yeah, we'll get to gold. Don't you worry. Gold, I'm sorry to burst the bubble though. I'm still very bored with gold. There's just nothing for me to talk about on gold. It's super boring. Just the technicals are choppy and the macro is mixed. That's the long story short. I do still like Bitcoin. Somebody asked me with Bitcoin, was that is that all we're going to get? Break and retest there in Bitcoin? And the answer is maybe, right? Bitcoin looks really strong right now. I've got an up 2.78% move. I do like the idea of maybe this kind of move happening on Bitcoin. Like if you get a move up to, let's call it 80,000 and then a pullback into support. I like that scenario. Like I think Bitcoin has momentum to the upside forming. I would still, of course, like to wait for a pullback, but I think this thing has contracted for a number of months. You've seen a downside move. And if risk assets are going to go for a run, if stocks are going to break through all-time highs, maybe the more bang for your buck is in Bitcoin, but we'll see. Again, that type of move, I think the risk reward there looks good. And that's all that ever matters, right? I'm making no claim of, where I think it's going to be 6 months from now or a year from now. I'm just saying right now, momentum looks good. Macro looks supportive of risk assets. So for the time being, maybe there's a trade here and I can define my risk. And I think that the risk reward looks attractive, right? So this sort of move, I could risk what's comfortable to me to make a substantially more profit if the thing were to run, right? I took a stab in it. Yeah, I mean, again, nobody knows where it's going for certain. It could go up it could go straight back to the all-time highs in the next month. Bitcoin's an insane animal. It's a beast. It is a beast in terms of its daily move. It's why people like trading it. So I do like Bitcoin alongside. I think it has room to continue. I'd wait for pullbacks. Specifically, I'd really like to see like a test of 80,000. Just punch through this level like one more time, right? A fresh high, a higher high here. And then I really like the technicals. Like that looks like oil a couple months ago where we caught, that upside breakout in oil, which was fantastic. You had this change in nature of the chart. And it coincided, and this is the part for me personally that mattered most. We had a change in nature on the technical chart that married up beautifully with a changing macro fundamentals score within Edgefinder. Jobs data held up a little bit better. Inflation was cooling, right, at the time. And then, of course, we just launched, right? Where's the Discord link? Yeah, thanks for asking that, Melissa, because I just wanted to make sure that everybody knows we did open up a free Discord server, or I'm sorry, a free chat in our Discord, which is now available. So if you are interested in joining our free Discord, we will drop that there in the chat. We have a free Discord. Now, we are struggling with this. We have scammers messing around in here, but we always have scammers. Even before opening up the free chat, we've had problems with scammers. Now they have a place to chat, but the good thing is the scammers, we've been pretty quick at banning them, and we've also changed it so that you have to have a valid phone number on your account in order to chat, which will hopefully improve things. But yeah, it's pros and cons, right? The pros are that we have more conversations than ever going on. The community aspect is better than ever with free chat too, because we have a lot of people who, maybe they purchased a copy of Edgefinder. They're very serious about this stuff. They just don't have a VIP membership with us. So it gives them a limited way to still be a part of the conversation. So for now, it will stick. Maybe it won't one day. Maybe we'll take it off. But so far, we've seen a lot of positives and a lot of great conversations coming through on the Discord and the free chat too. Anyways, I'm watching oil here. Speaking of which, it is looking decently strong. I have a short put position on XOP, so that's actually working pretty well today. Yesterday we were up 2.4% on XOP. Nice little rally here. And this is why I like trading ETFs. I can specifically pick my spots. So I picked the S&P oil and gas exploration ETF here. I sold a put down at 148 in this candle here, which was nice because when the stock has now rallied back, or the ETF here has rallied back, those puts are worth less than what I initially sold them for. So what I can do here is if this thing catches a little bit more of a bounce to the upside or goes sideways for a few days or weeks, I can close it out for a profit. So we'll see. Elliott concepts overwritten by fundamentals. I don't use Elliott waves. I think the problem with Elliott waves, if you ask 5 different Elliott wave traders to give you a markup on a chart, you'll have 5 different charts because they're kind of, but granted, same too with most technical analysis. Like technical analysis has a lot of subjectivity to it. And so, if you want to be like a very mechanical technical trader, then use indicators. Like indicators are the least subjective to an extent. Like if I test a strategy with moving averages are going to be the same on everyone's. If we place the same 200-day simple moving average on a chart, we all see the same level, right? If you're using price action, we're all going to see things differently. So that's why I'm not a big fan of, just dogging on indicators like they're just worthless. The power of indicators is that they're very repeatable, and they also are pretty objective once you've set rules and tested a certain system with them. Whereas price action, it can be very easy to see something that's not there. And this is coming from someone who primarily uses price action. Like I'm just acknowledging the strengths and weaknesses of all. What about UK 100? Yeah, same thing as the DAX. You do have a nice little level coming into play. Like this might actually be worth looking at closer. You've got this level here, retesting, fib retracement. Is that a 38.2? Not quite. So maybe like this area here, like you could see a quick stab down into the 38.2% retracement. And then I think that most indices are probably headed back to those all-time highs. That would be my personal take on UK 100. We also have Edge Finder confirmation, I believe. Let's see. Oh, no, we don't. So no trade. Why? Let's take a look. Inflation 2.6%. Unemployment rate has improved. That's good. But we just have a mixed view here. So let me dive into this for just a second. Manufacturing PMIs worse than expected. Services PMIs worse than expected. Retail sales negative, but still better than expected, I should say. Consumer confidence slightly better than expected. Daily chart flipping more bearish. Yeah, so UK 100 would definitely be a pass for me. I like the technicals though. Like I like the chart. I think, you get that kind of pullback into support. I like that technical setup, but technicals alone are they're never enough for me to take a trade. Like I need a macro, I need a supportive game plan to go with it. I mentioned earlier, I am long copper. I also have kind of a proxy long on US oil through my XOP short put position. Do you still have positions in the Indian stock market? I do, through the ETF INDA. Again, another reason I love ETFs is I can kind of pick my spots. It's not a huge position for me, but I do have INDA. India has some of the most fast growth. Like their economy is growing very fast. And I think that could over time materially turn into capital markets continuing to invest in India. So I do like India for the long term. Stock market in India has, at one point had pulled down 23.6%. It's rebounded since. I was definitely early in my initial buy of INDA. But again, these were not short-term trades. This was sort of just like a stick it in the portfolio and let time play out. And I could be wrong on this theory, but I do think that the Indian stock market has potential. But I also did a couple other trades like that. These are more, not really short-term trades. They are longer-term positions. I also bought IJR. This is small cap core, which is going to be kind of a mix of quality and growth stocks that are small cap in nature. So these are smaller businesses. And small caps have been absolutely just beaten down over the last few years, especially when compared to big tech stocks. But in the long run, feel free to do your research on this. Small caps actually have several windows of history where they've greatly outperformed the S&P 500. Now, the popular trade nowadays is, let's do this. IWM/SPY. So this is going to compare the performance of IWM, the popular small cap ETF, versus the S&P 500. And if you look at this, zoom out, and you'll say, Nick, why on earth are you essentially willing to bet on small cap stocks when this chart clearly seems to show large cap stocks are the better buy, right? Because in this scenario, short IWM, long SPY has been a profitable trade. Buy the big ones, sell the small ones. But it's not, markets are never that easy, in the sense that I think now with all this AI spending, that here's my theory, right? This is investor Nick side of things, not so much trader Nick. I think that small cap stocks may actually turn out to be the winner. I can tell you from a local anecdotal level, I'm not spending billions upon billions of dollars to build data centers, but my small business is benefiting from AI. Like, we build tools faster than ever and better than ever with the help of AI, right? So our company, we're a small software business. We build some of the best tools with the help of AI, and we're not the ones pioneering and building AI, right? Part of the reason I went long IJR and do think that there is a secular shift in the nature of small cap stocks coming is that I think small businesses who are not paying for all the data center stuff will benefit from the spending done by the big ones that are spending all that money on it. Just my thought, just my opinion. Don't listen to me. I'm just some idiot on the internet. Be careful with trading, investing. It's all risky. But that's my theory. So I have a long position on IJR. Small cap stocks, I think, could outperform in coming years and benefit greatly from all the AI innovation. Gold, bro, please. Well, just because you spammed my chat, I'm not going to look at gold. I was just about to do it, but you spammed the chat. You ruined it for everyone. We will not be, unfortunately, doing gold today. Anyways, up next, Alan, he probably will do gold. So don't worry. Gold, long story short, on my side, I'm very neutral on it. I'm very frustrated with gold in the sense that it's just been going nowhere. And also fundamentals mixed, sentiment and COT slightly positive, technicals look good. But yeah, I don't have enough conviction to take a trade on gold. And in my personal opinion, the chart looks really mixed. Like, it looks like we may be in a long, boring range, like the dollar's kind of been in for the last couple months or last year or so. Anyways, guys, if you don't have access to Edge Finder, it is currently on super sale right now. We're doing our big 40% off yearly discount, or our biggest sale of the year discount, where we're doing 40% off. We also are offering payment plans if that's something that you need access to. Chat with our support team down below in the live stream description or in the live stream chat. Just click this link and it will connect you to a real person on our support team who can get you set up with access to the tool for a really big discount. So yes, 40% off for a limited time. And you can also, if it's easier, you can scan the QR code below my camera. But yeah, take advantage. Also, I know we've had a lot of people taking us up on the payment plan option, just to make the product more accessible to a current budget that you may have. We also know that the dollar is expensive in a lot of other countries, and a lot of our customers are not from the US. So if you need a payment plan, message in, and our support team is wonderful. They can help you out with that. I'd prefer silver if anything, but eco is yuck. Yeah, Tiger, that's the thing, man. It's just, when I look at the metals, like, I love trading metals. Like, I'm not dogging trading metals. It's like my favorite thing to trade. Gold is like one of the most profitable things I've traded in my trading career for me personally. So I don't like it when it's neutral, but sometimes you just kind of have to wait and, just wait for setups to come to you. Get the Edge Finder, guys. It'll change your life. Thank you, Tiger. Appreciate that. Guys, up next, we have Alan Perez taking over the stream, taking a look at some more markets. He is a little bit more heavy on the FX side of things as well, which I know a lot of you guys really appreciate. So stay tuned on that. Alan is next. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone, or afternoon, wherever you guys are watching this. I hope you guys are having a great day. Like always, if there's any chart markups that you guys want me to go over, anything like that, feel free to drop those into the chat. I would do my very best to go ahead and go over them. I did see someone that was very wanting us to cover gold here, so I'll do that some point here. Sluggy, what's going on, man? Hope everything's good for you. Let's go ahead and talk about the dollar here. As Nick said, I am a little bit more focused on the FX side, but I do watch every single chart because they are all correlated in some way. They are all intertwined. They all affect each other. So it's very important that although you're a little bit heavy on one asset class, it's very important that you're aware of what's going on in the entire macro outlook. That way you can see, where things are, or the best plays are, where to stay away from. In this case, gold, right? So gold, very popular. I will say, I do notice that a lot of people really love gold. Not even just this community, A1 trading, but everywhere else. It seems like gold is like the biggest thing. But right now it's kind of dead. But we'll get into that. I'll go into the dollar here first. Here, I'm kind of neutral to bearish on the dollar, or I would say more neutral really. But right now, we did see some headlines here, some comments about possible talks as soon as Friday, and the more this whole war in the Middle East, continues and drags on, the kind of less emphasis I have on the headlines because they seem to be worthless now. So you did see that. You did see a little bit of dollar like falling a little bit here, but it's pretty much flat on the day. Really nothing changed here. So again, this is just one of those things where the market's going to start just focusing more on the fundamentals, the macro, versus the headlines here. I know a lot of it has to do with oil here, and oil is still high. It's still in the 90s there, but it is definitely making some progress from its recent all-time highs here. So we're down about 23%, and I think oil within the 84 to $72 range. I think that's a healthy number for oil, where it's not too problematic. However, once you get into the hundreds, 120s area, that's very problematic for global inflation and everything like that. But for now, it seems like markets are doing okay here. I mean, clearly, you do have the stock markets here within the highs, no pullbacks at all. Nasdaq, Dow Jones, all of them here are making a lot of progress here, a lot of optimism. So we'll see how that happens, right? Excuse me, I had a very dry spot in my throat. We'll see how that progresses. But for now, let's go ahead and talk about here the dollar index. Here we are at this level of support here, $98. We are seeming to bounce off of that. But in my personal opinion, we have a couple levels of resistance that we have to be mindful of. So we do have this one here, 98.5, where you have these important moving averages. Then you also have 99.5 as well. And if you do trade up into this level here, you would be filling this gap here. And then the ultimate level of resistance that has held for a good amount of time here is 100.5. Now, do I think we can get to 100.5? I think it's possible. Dollar index here, if you just zoom out here for a little bit, you do have this big range that we've been trading in, right, for a very long time. So I do think that we are within the, I think that it's still probable that we trade within this range. So it's just a matter of finding trading ideas, within the range, finding your levels that you want to go trade into, whether it be if you're bullish that you want to trade, up into the upper levels. And if you're bearish, you want to trade into the bottom levels here. So my current dilemma here is that it's kind of hard to make a decisive, strong call at the moment. That's my thing, right? So I'm kind of neutral here on the dollar. The way I'm currently playing it right now is slightly because I am slightly optimistic here when it comes to risk on, right? Like obviously we're seeing this move in equities. However, I do think that a pullback can happen. Do I know when it can happen? Absolutely not. So if we were to get a pullback in the equities, right? Let's say into this moving average here at 6,800 or 6,750, right? If you look at the normal relationship that you have with equities and the US dollar, it's an inverse relationship. So although I am, looking to go ahead and short the dollar here, if we were to get that pullback in equities, how far does dollar go? And then until you ultimately, short it, right? Short, fade anything up there. So that's kind of my dilemma here. So essentially, if I were to short the dollar right now, that means that equities continue higher. Does that make sense? So I obviously want to short the dollar as equities are pulling back. That way I can participate in my risk on play. My risk on play would be Australian dollar. I like Australian dollar at the 50-day moving average. I think that's a good level here, or ideally 695. So again, that would cause a pullback in the dollar, right? Euro dollar, I like it long as well. On the top setups page here for the Edge Finder, we are seeing that the euro asset as an isolated asset here is getting a bullish reading of 6. So I like to see that. Again, I want to get a pullback, and it seems like we are getting some kind of that action here today. So getting a little bit of a pullback here in the euro dollar. If we can get into the 1.165, I would like to buy that. Another one here, the UK, the pound, is actually doing quite okay. This morning here, and I'll put this up on my screen here, we did have some good data here out of the UK, some inflation. Now, headline inflation, CPI year over year came in flat at 3.3, elevated from the previous 3.0. However, we did have some like services CPI tick up, all these other metrics here when it comes to UK inflation ticking up higher there. So that's going to be good for the UK. So again, I would like for a pullback here in the British pound. That's one of the ones that I'm looking at, along with Euro, Aussie. And then as far as Kiwi dollar, not looking to trade Kiwi dollar to the upside, although we are seeing some progress here as far as price action. But on the Edge Finder, it does show that it's getting a bearish reading of -6 here. Also, Kiwi yen as well. So I'm going to stay away from Kiwi dollar. So my top ones are Aussie dollar long, Euro dollar long. If you get some improving growth data for the UK, then maybe I can replace the euro with the pound. But for right now, I would like to prefer Euro and Aussie dollar long. Now, as far as what am I doing at the moment to kind of, participate a little bit here, I know this sounds a little bit counterintuitive, as I've mentioned here that I'm kind of iffy on the direction here for the dollar, but I've been shorting as of Friday here, any pops in dollar yen here, very short-term intraday, and it's been doing okay here for me. But again, holding on to positions, swing trading like I usually do, that's very hard for me to make a decisive call on direction right now. It's very, very tricky. So I kind of don't have any clarity as far as where the war in the Middle East is going to go. So that's why I'm kind of playing very short term with dollar yen there as we get into the upper limits of close to that 160 handle. But for now, ideally, I want to short the dollar if we get any good large pops there. Now, of course, that playbook is contingent on the data for the U.S., right? So the data in the U.S. is actually not that bad. However, the reason why I'm looking to short the dollar against like the Aussie or the euro here, let's go to equal to price index. I'll show you. Actually, let's go to this one here. When you take account growth, inflation, unemployment rate, interest rate, Aussie and the yen are strong against the U.S. dollar. So U.S. dollar is actually number 3 here, and you're getting the Aussie and the yen that are stronger than the U.S. So that's why I'm going short dollar yen short term as we get to that 160 handle within those upper limits. And longer term, I want to go ahead and do the Aussie basket long again. I did that earlier in the year, and it worked out quite well for me. And I have these marked up here on my charts here. So I have Aussie CAD that I'm looking to go long, Aussie Swiss, Aussie Kiwi as well that I'm looking to go long. However, I just need those pullbacks. I can't chase price right now because if you get a pullback in the dollar, then these things continue to fall lower. And then I'm just in an unnecessary drawdown. So I think a lot of us, and you guys can correct me here in the chat as well. Are you guys finding trade setups? Are you having to stay patient, force yourself to stay patient? Like, what are you guys doing? I just want to ask that. And then we'll go ahead and talk about another thing here as well. What am I watching? Anything new? Sluggy? Yeah, I'm just waiting for pullbacks, man, in the dollar, and also just clarity on what's going on out there in the Middle East. CMO, what's good, man? Max, how you doing? H Bala, how was Taco Tuesday? Bala, I am on a 3-day fast. This is day 2, and my fast ends Thursday at 7 p.m. So no Taco Tuesday for me, man. Alan, look at Swiss yen, took out the all-time high. Yeah, Swiss yen, I was clearly early on that one. I took a loss. Though the technicals now are, let me go ahead and delete this because it's outdated here. So Swiss yen, the dilemma with Swiss yen is that when you want to short it, I think it's a great short. Don't get me wrong. And I think when the stars align for Swiss yen, it's going to be a great play. However, the hard part is that there is no technical structure to the left to kind of base a short trade off of. And so essentially you're just shorting, a very strong bullish trend here. When I entered the trade, we crossed below the 50-day, and then we crossed below a upward trend there. And we were actually like, this was a level of support here that I had marked off that we broke. However, this is one of those things where this trade's not going to move to the downside until the Bank of Japan actually intervenes. And so we didn't get any confirmation of that. And so that's why the trade was a loss. And so until then, like as far as the Bank of Japan intervention goes, I probably won't participate until I get a clear, decisive indication that already happened. So because if you continue to take stabs at it, eventually you will be right. But then how many losses do you take until you're right? So that was my first attempt. Again, the technicals lined up fantastic for me. There was even a bearish reading on the edge finder. You had positive swaps, all the good stuff. However, it seems like I was early there. So, you take the loss and you move on. And again, I'll probably participate with any yen pairs only if and when you get a confirmation that the Bank of Japan intervened. All right, let's go ahead and see here.
Hello.
Eurocat. Oh, hey, Marco.
Hello.
Were you here for a while, man? My bad.
No, just
again.
20 seconds.
20 seconds. Okay, cool.
Yep. Are you back at home?
I'm back home, man. I'm back home.
Awesome. How have you been? Any trades? We haven't spoken in a couple of days now.
Yeah.
So,
since last Thursday.
Yeah, what's new?
So as far as like my usual swing trading currencies, that stuff, nothing yet. I was telling the chat really that I'm kind of neutral on the dollar index direction because a lot of it has to do with one, what's going on in the Middle East, but then also too you have like some pretty okay numbers here for the US. I think there's some better economies, like when you look at Australian dollar. So that's why I'm looking to go long Aussie dollar. But again, I'm waiting for a pullback into some key levels there because I don't want to be in an unnecessary drawdown. And that kind of coincides with like stock market, right? Like Aussie dollar along with the S&P and the Nasdaq and all that good stuff is a risk asset, a risk on currency. And so if I go along Aussie dollar here, I'm essentially kind of doing the same characteristics as going along the S&P at these highs. So I want to see some kind of a pullback. And it seems like I asked a question to the chat. How are you guys participating? Like, are you guys active or not? And it seems like a lot of us are patient as well, which is a little bit frustrating. So to answer your question, Marco, have I been doing anything different? The only thing was dollar yen here short as you get to these upper limits here. So this was a trade I took as well. Dollar yen as we get close to that 160 handle here. It's a flat trade on my end, but again, I'm just taking a very like small intraday approach, and not really holding on to it for a long time. Again, my bread and butter is swing trading, and I just haven't got any directional bias really that's hard, concrete that I can act on. Are you swaying kind of one direction or not? Like, are you more bearish? Risk on? What assets really call you? Because that's another big question too. Like when you are looking to get active, is there a certain asset that you're looking to trade on?
For me, I was waiting for today for the ceasefire expiration. That didn't really go to plan because the ceasefire got extended. So we are essentially stuck in this position. Or we remain stuck in this position where there is no escalation or de-escalation. It's just a stalemate where there's a ceasefire, but the Strait of Hormuz is closed, the blockade is in, and essentially Trump is trying to bleed Iran dry by doing the blockade, which means the markets are a bit flat, a bit slow, and most of the traders that I'm following have pretty much a flat book at the moment. Like Brent Donnelly, he is flat. Nick, I think, only has a position on copper, and he's doing covered calls on some stocks, which is creating some nice income, but it's not really a directional play. So covered calls are great if you have big capital, and they're great to deploy in quiet times. But I think he only has a buy trade on copper, which I took his signal on some of my prop firm accounts. So as far as my personal trading decisions, I'm flat, being patient at the moment, because this is the exact sort of market where you can lose what you made during the trending phase.
Oh yeah.
And now is the time where all of the voices start creeping in, and you wake up every day and you do nothing, and it feels wrong, and you feel unproductive. You feel kind of stuck in this position, and that's where, when the forced trades start to come, that's when the drawdown. That's where basically the drawdown starts to appear.
Yeah, it seems like everyone's on the same boat here. Like, I was reading the comments here a little bit. Some people are just sitting around, just sipping coffee and waiting here. Tiger's
Yeah.
flat as well. Not doing much. Someone started learning German to start killing time. So yeah, man. Like I'm flat here. It's a little bit frustrating because you want to be involved, but again, I've been flat before. And from experience, whenever markets start moving again and you have the obvious trade, you really make up for all of that dead time in a couple hands, in a couple of trades.
Yep.
So that's kind of what I'm just remembering here. And again, it's just part of the game, right? Especially because I trade Forex mostly here. My kind of like my pool or like my tradable assets kind of narrows down even further there. So I definitely have to be patient. But I think when the obvious trade presents itself, it's going to be, game on, and we go ahead and start trading. And again, you make up for that dead time. But I wanted to ask you, Marco, I don't know if you saw the hearing with Warsh yesterday. Did you hear that?
Yep. Mm-hmm.
How did it go?
Mm-hmm.
Do you have any thoughts on that?
I think it went hawkish. I think we had the dollar going up and stocks dropping lower. Although I haven't done like full-on research into it, I'm gonna do it today. But just the reaction from it seems to be dollar up, stocks down. It should have been on Financial Juice if I'm not mistaken. So if we go to, I know Nick posted about it in the Discord. Let me check out the market moving news. Yeah, I don't see anything about Warsh here, but I think he sounded a bit hawkish. I think he sounded a bit hawkish. Does it matter what he had to say at this speech? Well, at the moment, it doesn't really matter, because the only thing that seems to be moving the markets is the US and Iran stuff. And the stock market has a mind of its own where it wants to continue to push higher. So the only opportunity that I see right now is pretty much in equities, in the S&P and the Nikkei. If we get an actual pullback to the 20 EMA, that's something that I will be watching. And just to go back to the topic we have been talking about, like at the beginning of March, when the conflict started, most traders had the feeling, okay, now is the time to really get in and start taking positions. And it was really obvious that it's going to be a pretty volatile time and that some trends will form. Now, if you actually step away from the screen and if you think about it, this is the time to sit on your hands, basically. But that's the toughest thing to do. The toughest thing is to do nothing, because you feel super unproductive. You feel like you're walking backwards. So just wanted to comment on that, which is the exact feeling I had in March. Like in March, it was all about, let's get into it. Let's take some positions. Where can I buy? What can I sell? And now it's just, there's nothing. If you really think about it, there's nothing except, as I mentioned, equities, where you can buy the dip, which we are waiting for the dip. So hopefully that does happen.
I mean, even equities, right? Like equities saw a big inflow. They were very much in play here, and now they have been sitting within the same price level here for 4 days now. So even the ones that, even the assets that were in play, very attractive, everyone was rushing to get into them. Even those are pretty stale. So yeah, it's just one of those things where you have to be patient there and wait for an opportunity to present itself. And whenever the time does come, you put your chips on the table and you start executing.
Yep.
Nikkei was one of the things on your horizon, and I also want to talk about the metals too, because I think that when it comes to the gold story, There's a potential opportunity there, maybe sooner than we think. But as far as like your equities, are you still within the Nikkei? Is that your still preferred equity index?
Absolutely. Absolutely. Nikkei is still the number one thing for me, because it's still beating the S&P. The government in Japan is still super dovish. Capital is going back into Japan. The carry trade is unwinding, meaning the dollar is getting sold while the yen is getting bid, or just money is going out of the carry trade and possibly back into Japan, into the stock market. And we see the price action on the daily, very healthy. Yes, we had the dip because of the US and Iran conflict, but we're pretty much back on schedule, back on track above the 20 MA, and we are back following this pretty huge uptrend. So just the outperformance of the S&P is enough for me to be focusing on the Nikkei. And as far as currencies go, I'm looking at the Aussie NZD. It is bullish on the Edge Finder. So very bullish. But then I'm thinking about it, and again, do I actually have an edge if I buy near the 20 MA, which is my game plan? And yes, I do, because there are multiple confluences telling me that there is an edge and that the uptrend should continue. But is this the right time? Is this the right market environment to be taking a position on Forex? When the volatility is low and when I could possibly get stuck in this position for longer than I would like. And at the moment, the answer is I'd prefer to be more patient. Once the volatility can kick back into Forex, then it's going to be game on, and Aussie NZD is going to be the first thing on the list. So I do have it on the watch list, but I don't want to get in just yet. So that's my favorite currency pair. UJ is another thing I have on the watch list, where I have the 160 level. I'm just going to sell at 160. That I don't care about US. I don't care about Iran. I don't care about pretty much anything. I just want to sell at 160 and wait for a dip. But Bitcoin is something that we should comment on, because Bitcoin is breaking out with some pretty nice momentum, and the Edge Finder is bullish. If I'm not mistaken, let's take a look. So yeah,
I did see that.
Reading.
Yeah, and the price action is looking quite strong here, especially these last 2 days as well.
Yeah, I mean, this daily candle looks pretty nice, looks pretty healthy. So for me personally, I'll be looking for buy setups on a pullback to the 20 MA. This is now enough momentum for me. If we close like this, if we get a huge wig, then no, it's not enough. But if we close with a clean close, I would say this is a great confirmation that the buyers have stepped back in and that we are ready to go to some highs on Bitcoin. Are you seeing a similar thing?
I am. Although I'm not a crypto trader by any means. And again, it's easy to make a call when you have no money on the line and you're just kind of, talking, right? Hypotheticals here. But I do think that Bitcoin here has made what seems to be a very good looking, attractive bottom. You had this big leg lower here, and then you have this V-shaped recovery. Like this is a true definition of a V-shaped recovery. And I always advocate for this, like especially when you're trading an asset class like this that's very volatile. You don't want to catch a falling knife. You want to wait for a V-shaped recovery, even if that means you're not buying at the very bottom and you're missing out on these gains. You kind of have an understanding that this thing is starting to make a recovery. You do have that 50-day moving average below it as well. That is now decisively below it. So I think that the technicals look very well. You also have that edge finder confirmation as well. That's giving it that bump up as well. So I do think that Bitcoin would be a good buy. Again, not financial advice. I don't trade Bitcoin. I'm not a Bitcoin expert, so take what I say with a grain of salt there. But even like a buy here or a retest into this level here and then trading it higher, there's a couple ways you can go about that. But I do like Bitcoin for sure.
I think it's actually my second favorite thing after the Nikkei. So equities, in my opinion, are in play at the moment. Bitcoin has just become in play because we had the breakout, we had the momentum, we had that clean close. And before we continue, I just want to post the link to the giveaway form. So if you guys want to participate in the DNA funded giveaway, just fill out the form that I will now put in the comment section and you will get entered into the giveaway. So it's going to be a 10K one phase account. just to put it out there. And you mentioned the metals market. You wanted to talk about gold?
Yeah, so gold, I think, although it has been very gold has lost its shine, right? It's been very dead
Mm-hmm.
here. I think that similar to, I would say kind of similar to Bitcoin, where it's been a little bit quiet. I do think that maybe in the future, in the near term future, you can have gold becoming one of those, asset classes that starts to perform well again. I know the performance and kind of like what really hurt gold was, of course, yields, the inflation story, all that stuff, and that's all indirectly related to gold or oil. So I do think that if you were to have continued progress in the Middle East, yields come lower, oil comes lower, then you have a potential set up there for gold. The thing that I would kind of emphasize here is that I would really like to be patient and only get it within this level here of 4,400
Okay.
and 4,200.
Mm-hmm.
That's my big thing here on the Edge Finder. The reading for gold was actually quite low, and it's now having a different score here. So now it's 3 versus it was like
Mm-hmm.
-4, -2. It was very neutral. Yesterday was 4, so borderline of a bullish reading. So kind of one thing that I'm looking for is one, yields lower, oil lower, and central bank, especially in the Fed here, is indicating that they're looking to go ahead and cut rates. Um,
Okay.
I don't know what
Okay.
your thoughts were. Well, I know what your thoughts were. They were somewhat hawkish there for the meeting there that we had with Warsh yesterday. Um, there's a lot of things, and I think there's going to be some kind of a regime change when it comes to if he were to be elected the Fed chair. Like he wants to get rid of PCE and go to newer forward-looking data points. So that's going to
Mm-hmm.
be another
Mm-hmm.
thing that we have to navigate.
Yeah, he
But
wants to
yeah,
shorten the projections, if I got that right.
exactly,
Yeah.
exactly. And
Yep. Yep.
Powell, he does a live stream or a live conference after every FOMC
Yep.
meeting, and
Yep.
Warsh didn't actually commit to doing that. So perhaps we have less,
Okay.
and so if we have less of those, then the volatility around the ones that do happen are a lot higher. So there's going to be a big regime change. I don't know how the confidence and the market's going to like that, but maybe that's something that gold thrives off of, which is a little bit of uncertainty there. So we'll see how that plays out. But yeah, man, I'll kind of let you get to it there because I know that we're running out of time here, and I know we have some show guests after us as well. We have
Yep.
James and
Sure.
Tiger, so I'll let you go ahead and do the giveaway there for DNA Funded. One thing I will say though, guys, is definitely go ahead and get yourself a copy of the Edge Finder. It is currently 45% off here. So if you go to the website here, I'm sure the people here, James, the co-host here, will put the discount there in the chat. And also, too, one other thing, go ahead and join the Telegram channel. It is completely free value. You have daily chart markups every single day, as well as bonus content. So you guys will be very well equipped when it comes to navigating these markets. So thank you, Marco, for the lovely conversation, man. And we'll go ahead and talk about it tomorrow.
Sure. Let's talk about it tomorrow. And I'm looking forward to the next stream.
All right, man. Take it easy.
Yep. See you. Goodbye. I will post the link to the giveaway form one more time. So if you want to participate in the DNA Fund giveaway, look at the comment section. Let me copy the link. So it's a JOT form. Fill it out and you will get entered into the wheel of names. It's going to be a 10K one phase account. So take a look. I saw some comments and I would agree. Bitcoin seems to be the only thing that is moving alongside equities, I would say, because yes, it's true that equities have been slow from Monday, but you cannot deny the massive move up. So we're going to get some action. The probabilities are pretty high that we get some action here. Bitcoin is a fresh sort of mover. And this is a pretty nice push to the upside. Hopefully we go up more because I have a long-term investment in Bitcoin right around 70K, I believe. So I was pretty much break even and now it's starting to go up a little bit. So hopefully it does continue. I think we can easily go back to let's say 100K. I think that could easily happen. The risk is we get a crypto winter, of course. That's always the risk. And crypto winters can last for years. Just a couple of past examples. From the top in 2021 to the bottom in 2022 or 2023 even, okay? But here we had a similar thing that is happening right now, possibly. So you had the sell-off, you had the flat part, and then we went up and we even touched all-time highs. This is from 2021, and this happened in 2021. But this period lasted for what, a couple of months? Let's see, around 3 months. And the current one is a bit longer, isn't it? Yeah, definitely longer. But hopefully we don't get a crypto winter from this point, because that could last 3 times as long as what we got here. I would try to take an initial stab long for sure. I would like to get in on a buy setup. Personal game plan here is pull back to a 20 EMA. So Max says 79 could make it reject fast if indices sell off in that New York session. Yeah, so Bitcoin risk on asset very much correlated to the Nasdaq. So if you get a large sell-off on stocks, yes, for sure, Bitcoin will suffer as well. But I think we have found at least a short-term bottom on Bitcoin. So I would say this is at least a short-term support level, short-term bottom. So there's very little sellers left. That's at least how I see it, and that's at least how the people that I'm reading from see it, such as, let's say, Brent Only is an example. So we went through the Nikkei favorite stock index, looking for a pullback to a 20 MA. Aussie NZD is getting a bullish reading on the Edge Finder. Personally, I want to stay patient. Personally, I want to sit on my hands at the moment, especially when it comes to Forex. I don't think I have a massive edge in the current market condition. I don't see a catalyst for markets to move. Okay, we're just sort of in a stalemate, US and Iran. With US and Iran, maybe we get some economic data, but you also have to know that the economic data that is coming out is skewed because of the US and Iran conflict, especially the inflation numbers. So will inflation stay high, or is it just a one-time spike in inflation? In terms of the calendar, do we have anything? Not much, especially not with the US dollar. And I think next week we should get the NFP. No, NFP is the week after that. But we get the FOMC press conference. Okay, so we get the press conference. We get actually quite a lot of stuff. We get the BOJ. We get the Bank of Canada. Just a second. We get the Fed, Bank of England, and the ECB. Yeah, all in 1 week. That's usually how it goes. Next week could be packed. Next week, we may actually get some movement in Forex. But at the moment, I know you don't want to hear it. I know that's kind of the worst option. I'm staying flat. Of course, if something changes, you will be notified in the A1 Discord. By the way, if you want to join the A1 Discord, you can click the link in the description of the stream, and you can use the code Marco to get 25% off. So you get all of my trades, analysis, breakdowns, general chat interaction. You can send me a message. You also have Nick's signals, Chris Pulver, iWind. You have Alan's analysis as well. So you have a bunch of professional, profitable traders in there showing you or giving you guidance. So let's do the giveaway. Let me copy all of the entries. Today is the 22nd of April. So let's find the 22nd of April. Okay, we have quite a lot of entries, which is nice to see. Let's go to the wheel, paste, spin. Let's take a look. Okay, this is going to be a tough one to pronounce. PRZEMYSLAW. Congrats on being the winner. I do have your contact information. So after my segment ends, I will send you an email with the code for the 10K on-phase account. If you do want to get funded with DNA, make sure to use the code A1 Live. Code A1 Live gets you 25% off. So A1 Live, 25% off any DNA funded challenge. This is my personal DNA funded 2-phase 25K two-phase fund account, I'm down $387. So essentially, I have 3 trades running. This is purely traded by ChatGPT, which is the challenge I'm doing, or kind of a series I'm doing on my YouTube channel. It has been going pretty well so far. Aim is to get a payout, of course. So I've had a great experience so far. There's a big broker behind this company. Their support is pretty fast with responses. They're using TradeLocker, which in my opinion and experience is the best retail execution software. I tried MetaTrader, of course. I tried CTrader. I saw DXTrade, which looks like crap, to be honest, and a couple of other ones, but TradeLocker by far the best software. So check it out, and don't forget to use the code A1Live for 25% off. Let's see, comments. I think we should focus on bigger picture macro-wise. It's still a risk-on asset, and people will only spend if they have too much cash. Of course, I do agree with Sluggy. I do believe that Bitcoin is going to follow stocks. And if there's a massive sell-off in stocks, there's going to be a sell-off on Bitcoin as well. Maybe Bitcoin is lagging a bit. Maybe the move on the Nasdaq has happened, and now Bitcoin is trying to catch up, which would be nice, you know? So maybe we get a bit more of a push just to catch up on the Nas. I'm of course looking for pullbacks. I'm not looking to get in at the moment, or I'm not looking to chase these highs. Let me just see on the 1 hour. How does it look on the 1 hour? Okay, it looks fine. Looks fine. The more people aboard the idea to wait and want to chase that market rally, the more it flag. To me, a big spike down is coming. Do you mean on Bitcoin a spike down is coming? BTC could see liquidity inflows if we start to see aggressive dovish narrative pricing again. Sure, absolutely. That could be the case. And we do have the Fed. We do have the Fed, as I mentioned, next week. So we should get more clarity on that. I'm not exactly sure when Warsh is going to step in to replace Powell. What I'm waiting for is I'm waiting for this transition for the markets to sort of stop looking at US and Iran so much and start looking at the economic data and the Fed and the central banks. Stocks have already started to ignore the conflict. FX is still low volatility. Gold is still pretty much doing nothing. I mean, most of the metals market is unfortunately not doing much. Gold, silver, copper, a bit of a pump. Platinum, yeah, just the volatility is in stocks at the moment. But my to-do list, I'm going to have to see what Warsh had to say yesterday, because I basically need to do my homework on that. Then we're going to have to monitor what the Fed thinks. Maybe they got some more clarity about the US and Iran situation. I know in the last meeting, they mentioned that they are monitoring US and Iran, so they're seeing how the situation develops, and then they will sort of know what to do. Will they proceed with the cuts, or maybe keep the rate the same, or maybe even do hikes, which I don't personally believe. I haven't seen the Fed Watch tool in a while, so let's open that up. Fed Watch tool. Let's take a look at that. By the end of 2026, what is priced in? Current rate is 350. We're pretty much priced in to stay flat. We're pretty much priced in for a hold. Yes, we're leaning dovish, meaning towards rate cuts, but the probabilities have definitely shifted from before the war started. We were supposed to get, I think, 2 or 3 rate cuts. I think 2 rate cuts in 2026. Now it's 0 rate cuts. Interesting. Like Marco said, I've been saying BTC could be a catch-up trade to Nasdaq. I think that's an interesting theory. So Nick has been saying that for a while now. Bitcoin is a technology stock. Bitcoin follows risk on. Bitcoin follows the Nas. Or Nas follows Bitcoin, depending on the correlation. So the Nas already had an explosion to the upside. Could it be time for Bitcoin to catch up, to go up? Yes, it could. Okay, thoughts on EU? We're gonna do euro dollar if I have the time. NAS chasing all-time highs. I mean, on a general approach, I hear a lot of people saying I'm buying the next small dip. Click on probabilities. Want to see the whole odds, not just the current and the next. It's free, so you can just open it in your browser. It's just the Fed Watch Tool website. I'm gonna do euro dollar, and then I'm gonna pass it on to the next guest. So euro dollar, flat in my opinion. Let me check on the edge finder. It's probably gonna be neutral. Yeah, neutral. I absolutely agree. I don't have a clear bias on the dollar. I think this chart is super flat. I don't want to touch Forex at the moment. I think we need another catalyst. I think we need more clarity. I think we need more volatility. Volatility in Forex has been very, very low in the last couple of months, maybe even last couple of years. So my focus is definitely not on Forex at the moment. My advice would be, not financial advice, but my advice would be to just be patient. Just sit on your hands during this market environment because it's very easy to lose all of the profits you made in the trending period. So that's about it from me. Thank you very much for watching. You can catch me tomorrow. I'll be doing another DNA fund giveaway. Don't go anywhere because James is coming on right after me. So good luck and see you tomorrow. Goodbye.
What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Hello. Happy Wednesday, ladies and gentlemen. Hope everyone's doing well. So, markets, how are they doing? I'm not really seeing too much. Still sat in the Aussie New Zealand long positions. So I scaled in one more time. So I'm basically at max allocation now on Aussie New Zealand. Normally, I'll only scale in 2 to 3 times. I've got my 3 positions now. Obviously, when I say 2 to 3 times, including the initial position. So the scale in here, taking off the low to the high, pull back into the fib zone, previous highs over here as well. So just looking for some sort of rejection to the upside from here. We did have a very, very small one right after my entry, but it's obviously not followed through to too much. We did have some positive news for New Zealand come out. We have seen Aussie New Zealand not drop off the Edge Finder, but decrease the score on the Edge Finder as well. So if this position doesn't really show any promise, I'll probably just liquidate all 3 and take my profit and just leave. New Zealand US dollars not doing much, just stuck in a multi-day consolidation here. Minor profit a couple of times, but obviously not looking to take profits at those points. But yeah, we're really just not seeing much at all here. So yeah, there's not really much to talk about there. We are long on the Swiss yen. I think I spoke about this one. In fact, no, I didn't speak about this one because it was taken this week. But yeah, we took a long on Swiss yen, basically just following the trend, taking advantage of the temporary yen weakness and looking for a continuation higher. And we executed a long on the Australian dollar Swiss this morning. So very simple trade here. Really nice uptrending channel. I don't trade channels, but this was what the trader who sent it basically marked out. So nice trend on the daily time frame. Fib from the low over here to the high, pull back into the value zone and continuation to the upside. Very sort of bread and butter is kind of what I show you guys basically on a daily basis. But yeah, that's it for open positions. I liquidated my Microsoft and Tesla positions, basically break even. There really wasn't much going on with them. I liquidated them to basically just build up or to keep extra cash on the sidelines. I'm still, or not still, but I'm just a little bit concerned that this year isn't going to be a smooth ride for the equities or the indices markets. So not really looking to be involved in those ones. I'm still long on SSLN, which is basically SLV, but for UK clients priced in sterling. So average price is currently at 5714, looking to basically just keep averaging into this position. Small positions, DCA, long-term holding, looking for the next 6 months, 1 year, 2 years, however long it may take. But yeah, more of an investment than a swing trade. Sluggy, hello. Max, good to see you. James, what do you think about shorting dollar CAD? I don't think I've really got any interest, to be honest. We did look at this one not too long ago. So yeah, what we were looking at previously was this weekly level of support, also this weekly 200 moving average. It just puts me off being a seller. However, I also can't justify being a buyer because the trends on the H4 and the daily are very aggressive to the downside. So daily here is actually a little bit oversold. So there might be, depending on whatever your bias is, personally I don't have one, really not interested. Yeah, so weekly 200 coming into weekly support, daily RSI is oversold. So if you are looking to be a seller, it might be more reasonable to look for, or sorry, to wait for some sort of pullback and then go short into these weekly lows. That's how I would do it. But yeah, again, I really don't see much for the way I trade anyway. GPNZD was a good call. Yes, look, I saw you take that one. I can't be involved. Edgefinder is bullish. I'm fairly sure you're shorting. So for me, they're too conflicting. But yeah, if you're making money from it, well done. If we look at Euro New Zealand, we can. So the New Zealand dollar seems to be displaying some strength recently. Again, as I said earlier, we did have some positive news that did strengthen the New Zealand dollar. So I wouldn't say it's as weak as it was, but I also wouldn't necessarily say it's a strong currency. So with that said, I wouldn't be looking to be a buyer just yet, but I also wouldn't really want to be a seller. So for my criteria to get into this market either way, I would need a catalyst. So I'd need either further improvements in data or further deteriorations in data. That's basically it. I'm pretty neutral on the euro. I'm pretty neutral across the board when it comes to currencies. I don't really have very much. Central banks across the board are pretty much on hold except the RBA. So yeah, when it comes to central bank policy, there's nothing there. Euros in New Zealand, as far as I'm aware, is not on here either. It's not. The closest thing we've got is the pound New Zealand, which we just looked at. NZD USD. Yes, I'm also in the New Zealand US dollar. It's not looking very good. It is on the Edgefinder with a bearish reading over here, but there's just too much indecision. I mean, this is what? How long has this been? 15th of April, and it's just been range bound since. There's no direction, there's nothing going on. We are respecting this H450 moving average, which is a little bit of a concern. The daily moving averages look like they're flipping bullish here. So again, a little bit of a concern. However, the Edgefinder is there. This is so far a lower high relative to the previous high. We're still within the fib zone here. So technically it's okay. It's just not great. Does that make sense? So yeah, not much I can do here. Just bear with me. I need a sip of water. Okay. Right. Babu, Bitcoin. Yes, we can have a look at Bitcoin. So it seems like my idea is playing out. So we were looking at Bitcoin over the past couple of weeks. Specifically last week, actually, I was looking more to be a buyer. So weekly 200 moving average, we had the weekly RSI oversold, and we had previous structure throughout this level. So technically speaking, it looked like a great buy. My only concerns were this weekly range, and at this time, it also wasn't on the Edgefinder. However, we've broken to the upside, and the edge finder is giving Bitcoin a bullish reading. So I would be very happy to be a buyer. Going forwards, though, there's a couple of small issues that I would just take into consideration. First of all, I'm not convinced that we're back to full risk on. Obviously, the S&P is doing well, Bitcoin's doing well. We are seeing risk on price action, but I think it's a little bit optimistic. I wouldn't say that it's justified enough to see, or it's not. This current situation isn't justifiable to be as risk on as the markets are, in my opinion. So we are coming up to some previous levels of resistance here. Previous levels of support that could turn into resistance. So this could potentially be viewed as more of just a pullback to relieve price a little bit, and then we continue lower. I don't know how realistic that is. I think, optimism is great. Bitcoin higher makes sense. But again, I'm just being maybe a little bit pessimistic, just to be on the safe side. So I'm not going to go into it too much here because I don't really see the reason to. But if you're in my Discord, you will have seen I sent out a research document on Monday, basically just detailing the current situation within the US. So things from mortgage delinquencies, student loan delinquencies, central banks, basically the whole of the financial state of the US. And the conclusion basically is there's a very high likelihood that we're going to see a 20 to 30% crash on the S&P or the overall market by the end of this year, maximum within 18 months. So that's just keeping me a little bit on edge, a little bit cautious about being overly risk on. However, I also don't want to be too risk off because we could get a complete de-escalation within the Middle East, which obviously would then warrant further risk on development. So I'm kind of in a is it catch-22? I'm not sure if that's the right phrase, but yeah, I'm in a little bit of a predicament really in what I really want to do. So I'm kind of just some small positions on swing trades, but overall I'm majority sat in cash right now. What's my thoughts on CAD long-term? I don't know, to be honest. I wouldn't say I'm very optimistic about Canada's economy. I think they're in a little bit of a situation, I think they're in a little bit of a similar situation to the UK in terms of, and I'm not Canadian, so I don't want to go too far into this and speak out of turn or with overconfidence, but I just think there is a lot of cracks that are only getting worse. And it's not necessarily within data points. It's more just within people's quality of living, cost of living, political pressure, that type of thing. But again, the Canadian economy is not my main concern. It's not something I research on a daily basis. But I wouldn't be holding Canadian dollars long term, put it that way. How, James, do you think, what do you think of the news coming through that Iran seized 2 vessels as a sign of escalation? You know what's funny? I'm not, well, yeah, I would say seizing vessels is a sign of escalation, but I wouldn't say it's enough to really do anything. I saw a headline come through. It wasn't a major headline. It wasn't on Financial Juice or anything. It might have been actually, but anyway, that's not the point. It was saying that apparently on Sunday, Trump was trying to get hold of nuclear codes, and the big but here, it's not verified information. It's from an ex-CIA general or an ex-military general or something. So it could be complete nonsense. I've got no idea if it's true or not, but honestly, it wouldn't surprise me. And if that is the case, it could be a sign that we might not be fully at the end of the Middle Eastern situation. But again, it's unverified, so don't hold on to that, but feel free to do your own research. So let's have a little look and get back on some trade ideas. The Nikkei, we were sat in the Nikkei. We ended up closing this one for a small return. I think we got about 0.35% out of it. It wasn't a huge one, but we did make some money. So we closed out around here once we saw this consolidation, a lack of follow through. So yeah, not really much of a talking point. What else is there? Yeah, so the US markets are looking a little bit stretched. And when I say US markets, I'm looking specifically at the S&P. The RSI on the daily is extremely overbought. Are we on the 4th week now? 1, 2, 3, yeah, 4th week. And so far, it's looking exactly like the previous 3 weeks of just intense buying pressure. It's not sustainable. normally when we have this type of price action, we do typically see some sort of correction. I'm not saying, I'm not saying tomorrow is going to go all the way back down to, I don't know, 6,500, but it just makes me a little bit concerned about being a buyer right now. So from just a swing trading perspective and the edge finder, I'm fairly sure the edge finder had a bullish reading. Yes, SPX 500 bullish. Oh, sorry, very bullish with a score of 9. So if we're just going off that and not my longer term doomer idea, I think we could be looking for some sort of pullback into this level of resistance, continuation higher, or it could be a little bit of a deeper pullback. So fib from the daily low, the previous sort of major low to the high, and then come and correct, come and correct some of this left side here. It's very aggressive upside, very impulsive. And again, that type of price action generally does see some sort of correction eventually. But when that will happen, I have no idea. What's my Discord? Just Google elitetraders.io and you can get access there. In fact, you know what? It's very long. It's not a fun read. It's something that's quite detailed, very boring, especially if you're not a macro trader. But I'll show you basically the idea of it. Let me just drag there you go. So basically what it does, it runs through the economics. It runs through, what else have we got here? The housing markets. We've got basically forward looking. So this is the .com bubble. This isn't by the way, I found the .com bubble by someone else. But either way, the point stands. The price action wise is very, very similar to what we had in the .com bubble. Now, I'm not saying, my point is not like a 2008 crash where we have a banking collapse, because we don't have CDOs in the banking system. There isn't that sort of ticking time bomb like we had in 2008. I think it's going to be more like the .com bubble in the sense that AI is going to pop, or some, even just devaluations by these very expensive or very overvalued stocks could be enough. So here, probability of a 25% drop. Probability is 25% of a 10 to 15% drawdown, 50% probability of a 20 to 30% drawdown, and a 25% probability of a 35 to 50% drawdown in the S&P. So that's kind of what I'm going with. But again, this isn't a sell everything now and get scared. I'm not trying to do that. This is just me looking ahead and being cautious and planning to basically try and navigate a worst case scenario. The liberals, I can't say that word, I don't think. Big time, we are super close to a recession. Yeah, I think, again, it seems to be a sort of a developed market problem. I think we were talking about this actually in my Discord a couple of days ago, but it's feeling like the end of the Monopoly game. If any of you guys have played Monopoly, at Christmas with your family or whatever, and you get to the point where you've got someone on the board that is just incredibly wealthy and everyone else is scrapping around to try and just get some pennies to try and pay the rent. It feels like we're at that stage. Everyone seems to be struggling. In the UK, we've got doctors complaining they can't afford to live. We've got people saying, they're on 140, 150, 160,000 pound salaries and they are still struggling. Bearing in mind that in the UK is classed as a top 1%. Or top 10% or whatever it is. So they're considered the wealthy ones and they're still complaining. So yeah, I mean, again, I'm not going to go into all of that because I could talk about it for hours, but I think we're in a little bit of a problem, especially within the Western world. Anyway, let's get back on topic. So there's not much I'm looking to do. Pound New Zealand can leave. Copper, I still like the idea of being a buyer of copper, but I just can't get in it yet. So the idea on copper is either we get a pullback here into the fib zone, or we have a break, retest, and continuation. I could enter on either. So I'd enter on the retest, or I'd enter on a rejection of the fib zone. One of those two is fine. But whilst it's just in this bit of consolidation at this level of resistance, I can't justify being involved just yet. The Russell, I don't really have any interest in trading it, but I'm keeping an eye on it for now. Platinum, I quite like the idea of, again, but right now can't do anything because we're just not seeing any price development. We're just sort of sideways, nothing going on, no trend or no developed trend anyway. Technically bullish, but yeah, no real trend to trade from. Bitcoin is definitely on the list, but as we've already discussed, I'm cautious, but I wouldn't mind being a buyer. I am very likely actually to trade Bitcoin basically by proxy of trading MSTR, which is MicroStrategy, or just strategy, I think they're called now. It's basically a leveraged way in, but then I could just buy and hold. Because the broker I'm with, I don't have permission to trade Bitcoin, which is a little bit unfortunate, but it is what it is. So I think basically just doing it by MSTR is the easiest way for me. And the DJPY is interesting. We were talking about this one. We were talking about New Zealand yen. Was it last week? Maybe it's Friday. So the Edge Finder is giving New Zealand yen a bearish reading. And my point was, I'm not going to trade against the Edge Finder. I've done it many times before, and I, like 9 times out of 10, I lose. The Edge Finder wins. So I've learned my lesson. I'm not doing that. So it's not a case where I'm going to start buying New Zealand yen right now, but what I wouldn't mind doing is waiting for the Edge Finder's sort of reading to play out, if you will. We get some downside or further downside or just retest of lows, and then maybe look to be a buyer at the lows once the Edge Finder can flip back to neutral or even bullish. I think that's probably the easiest way to navigate New Zealand yen, because I just really don't like the idea of being a seller. I like the idea more of being a buyer, but the Edge Finder is more acting as weirdly enough, a timing tool in this case, which it rarely is in the way I trade, but I think in this specific situation, it's quite good at using as a timing instrument. Maybe US 40 trillion debt could absorb into the crash. Yeah, I don't know. There's so many points. Sluggy, I think you're in my Discord. I'm not sure if you've read it or not, but yeah, there is a lot of things that can end up sort of popping, or not popping necessarily, but acting as the catalyst. We're not quite there yet, I don't think, but I think all it's going to take is one thing to go wrong, and then it's going to be like a domino effect, and it's going to be a bit messy. But again, I just want to clarify, I don't know 100%. It might not happen. We might just continue to rally for the rest of, for another 5 years. Who knows? But it's my worst case sort of research. I saw some people talking about corn. I don't trade corn, so I won't do this one for too long. But okay, I was just checking time. Yeah, I saw some people talking about corn. Technically, it looks pretty good. I mean, we bounced off the 200 daily moving average. RSI became a little bit oversold over here. We've had a really nice move to the upside. So maybe on the next pullback, maybe corn could be quite a nice long position. But again, I don't trade it. I don't know much about the supply chain or demand for corn or anything like that. But it did pique my interest, so I might do a little bit of research into corn and see if that's something that I want to be involved with. Going forwards, there's not too much else. So what do we have? Euro's getting a bullish reading. It could be worth looking at some euro dollar longs, actually. I don't think right now would be the best time. Let's just see. Yeah, maybe there's an idea here. And the reason I'm saying there might be an idea, because if we do get some sort of de-escalation, we could see the dollar lose its war premium even further move to the downside. We could see the euro obviously benefit from some risk on sentiment, but also benefit from the weaker dollar directly. If the Edge Finder is also giving euro a bullish reading, I think it's a pretty sensible idea. So maybe something like this is worthwhile. Now, I'm not necessarily super bullish, so I don't think I'd take this straight away. But if we got that catalyst, something to warrant being long, I think it would be worthwhile. In this case, if I did get long, I think take profit, it would just be at 1.2. I wouldn't like to hold euro dollar longs beyond that point. We have previously in the past heard the ECB speak out about 1.2. We previously rejected 1.2 as well. So I just don't think it's worthwhile trying to trade it beyond that point, because then you kind of get into a bit of a danger zone, in my opinion. Corn US dollar, yeah. But again, it's not something I'm very familiar with, so I'll stay away from it for now. Euro pound is getting a bearish reading. Let's take a look. We've looked at euro pound quite a lot over the past couple of weeks, but it's just not really doing much. So weekly, obviously, it's just a sideways horrible range. Daily, yeah, the daily is really not doing much either. Again, it's a very mean reverted market. So DCA wise, it's actually quite nice, but at the moment, it's not very tradable, in my opinion. Coming into the daily 200 moving average, coming into some daily lows, not really a fan of being a seller just yet. The H4 technically is in a bullish trend here with the moving average. So I'd need to see this H4 trend flip bullish. I'd need to see a continuation lower than the pullback. Maybe on this pullback, I could warrant being a short seller. But yeah, there's a few criteria there for this market to meet before I could really do anything. CAD Swiss. Let's take a look at that one. What's the reading? It's only 6, but maybe there is something here. Yeah, I don't think this is worthwhile even looking at, to be honest with you. So monthly obviously is bearish. I mean, I'm not sure really if anyone would want to be a buyer of this market just yet. Weekly also very bearish. Daily bearish. H4 is not doing anything. H1 maybe there's some sort of intraday trades on lower time frames, so 15-minute, 30-minute H1 time frames. Swing trading though, I think will be very difficult, because even if you did manage to get into a long position on a higher time frame, you've then got the even higher time frames that are just working against you big time. So again, the monthly, weekly, daily time frames, really not in favor of being a buyer. Yeah, I think that is pretty much it though, generally speaking, in terms of the edge finder. Let me just do a quick check up here. So I think, as I said, Aussie New Zealand is going to get cut pretty soon if we don't start seeing any improvements. So if this market comes down towards the 61.8 and closes below, I'll be out, and I'll very, very likely just call it a day, because as we've already spoken about, it's a very extended market. At some point, I would expect this to have at least a minimum a correction back to these highs. And obviously, I don't want to be stuck buying into that. That would be a little bit painful. So that's my caution on that one. New Zealand US dollar, again, very flat. So likely we'll close this out by the weekend or on Friday if we don't see any further positive developments for my idea. Swiss yen's doing okay. We had a little bit of a little bit of yen strength this morning, but I don't think it's anything to be concerned about. And Aussie Swiss is fine, so we'll let that one be. I was thinking about Japanese economy, and it makes sense for them to not be very hawkish since their economy is deflationary or disflationary. I mean, I don't think anyone is really expecting the Bank of Japan to hike. Really, I mean, there are, they could hike, but I don't think it's reasonable for the BOJ to really hike beyond 1%. Yeah, they're in a little bit of a problem as well. So, I mean, what can you do? I'm still very much in the mind that the yen is it is a funding currency, and it will remain a funding currency for the future. And when I say the future, obviously, I'm not saying in 20 years, but over the next 6 months, 12 months, 18 months even, I think it will just remain buy against the yen. Not sure if you guys heard that. That was a big bang. Not sure what it was. Maybe that's why XXXJPY never priced in hikes. I think they did price in a hike at one point, but it got priced out pretty quickly. I can't remember when it was, but it was earlier this year. But I'm not sure. Again, I can't remember when it was, but I don't think it was a big deal. I think it was some pricing in, but nothing dramatic. So I'm just thinking if there's anything else specifically I need to go over with you. I don't think there is. Seems like the pound Aussie, what's the Euro Aussie doing? Yeah, the Aussie or the pound Aussie and the Euro Aussie are continuing to run lower. It's not a huge surprise. Obviously, the Australian dollar is the most dominant currency right now, and has been for quite a while. But would we want to go short is the question. I think I would. I think I might re-engage with another short position in these markets at some point if I can get an entry. Let's just compare. I think Euro Aussie is actually looking a little bit more compelling just from a technical side. Obviously, I need to go and look at the fundamentals, but I think we could be looking. That's not a higher one. So high over here, wherever the low gets printed, maybe then obviously we draw the fib to the low, wait for a pullback into this fib zone, completely fine. We've reestablished into a bearish trend with the 200 now above the 50 again. So I think overall, technical wise, it's looking good. Just from a central bank aspect, it also looks pretty good to be short. So yeah, I'd be quite happy to be involved if we can see a reasonable pullback. It's a long price is going up. What do you mean, Hugo? Are you talking about Euro Aussie? Yeah, I mean, I'm not as bearish as I was, back over this period. I think actually Sluggy might remember, but back on pound Australian, where has it gone? Here. Actually, let's see if we can find it, because it was quite a while ago. Over here, we were looking at this gap. I was saying, I want to see this gap get filled, and then we can go short. It did fill. I didn't get the short, but I did actually get short later on, closer to here. But yeah, I mean, I was very, very bearish on this market for quite some time. It's not the same situation now. I think the majority of it is kind of priced in. We're now just seeing that relative strength taking over, or continuing to be the driver. But I still think there's potential for downside, but again, it wouldn't be as dramatic as I was once looking for. Australian dollar is a good run and shall continue. Yeah, I agree. Okay, so we've got, let me just double check the time. I think I might be at the end of my slot. Let me just see. I am. So we've got Tiger, trade like a tiger, coming on to take over. Ladies and gentlemen, have a fantastic rest of your days. I'll see you all tomorrow. Stay safe. Don't get margin called and don't go anywhere. Tiger is coming to take over the show.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Well, what's going on, everybody? Tiger here. Hope you all doing well. Happy hump day. Happy Wednesday. I'm coming on to close out the show for you, the closing picture, so to speak. On that note, my Kansas City Royals are doing terrible. They were 7-16 going into yesterday, and they finally won a game only because of a wild pitch. How sad is that? So there you go. We're the laughing stock of baseball as we speak. But we'll see if things change around. This season is young. And the Mets are doing even worse, so that's great. Anyway, guys, let me know in the chat if you have any tickers that you're looking at. I do have a couple positions on. I know I said in the chat earlier that my hands are so flat from sitting on them, but I got to the point, guys, on a couple of my trading platforms, well, really all three of them, to where I was getting kind of close to that 30-day rule. If you guys aren't aware, anybody that's had a challenge account, you know this probably, but if you have to place at least one trade every single, at least one every 30 days. Otherwise, it'll be a breach of the challenge because of inactivity. So I've went about 2.5, 3 weeks. So I still have a little time, but I did actually, I know that it was brought up earlier talking about the FTSE, okay, the UK 100. That is actually one I got into because yesterday we were still getting a bullish signal on this thing. You can't tell it now because it's not even on the list. But if we just revisit a little bit of history over here on the awesome asset scorecard, which Nick, of course, has put together in the last couple months, we'll just take a quick trip down memory lane. And again, it's only given us a +1, but up until yesterday, guys, we'd had quite a few straight bullish days, really 21 it looks like, because April 1st is the first time it went bullish. But yeah, all of a sudden everything just flipped. So when it comes to the economics behind that, I mean, we did have, or the fundamentals I should say, the CPI report came out today and it was right on forecast. But I think what ended up getting me, and what I didn't see as the update, was the claimant count change. Okay, so that's unemployment claims. That might be part of it right there. But other than that, hey, you know what? I still like it from a technical analysis point of view. And I only did just a tiny bit of risk on this thing anyway. Again, I was just trying to reset my 30 days because I didn't want to be breaching my account. So funny stuff. We'll take a look at the chart real quick. And basically what I was looking at was, during the Asian market on Tuesday going into, well, I should say Tuesday going into Wednesday. So Tuesday for us here in the States. Sorry, guys, get my words fixed here. But we had a big drop. And I just felt like this drop was like an overextension to the downside. I mean, if I look at the 2 hour, the 4 hour, my 50 EMA does remain above my 200, which I know I've kind of told you guys is one of my favorite odds enhancers. The reason that I wanted to get into this trade was because, number one, we got close to but did not touch that overhead supply zone. Okay, talking about this daily zone from way back when. We got close and we flirted with it, but we didn't touch it. If we would have touched that, I would have not had any interest in this demand. But because we did miss it, and because, over the short term, we have had a pretty decent uptrend since March 23rd, really when we kind of turned this thing around. But yeah, we just kind of went sideways during the ceasefire. So I just took a small flyer on this relatively strong pullback that we had after this big strong push up that we had back here on the 7th. So it was basically kind of a retracement of that. So yeah, I basically was looking at this thing on a 4 hour time frame, and just see if I can get a pretty decent trade out of this. So the volume spread analysis activity was okay. We had a pretty strong spike up back at that point. But again, the key is we didn't touch that overhead supply. So, hey, at the end of the day, the Edge Finder changed after I got into the trade. So I'm going to write it. Just because Edge Finder changes on us doesn't necessarily mean we have to go close our trade. I mean, at the end of the day, even on strong uptrends, we have pullbacks. Even on strong downtrends, we have pullbacks to the upside, right? Profit taking, people that are fighting the trend, pushing price, trying to push price the other way temporarily. So I'm going to ride this thing, and we'll see how that goes. But yeah, I've basically, and I gave it a pretty decent leash as well, guys. I've got my stop loss all the way underneath this whole 4 hour candle down here. And as far as take profit, I'm actually looking to try to take it up here around this overhead supply zone that you see here. So let me just kind of zoom in real quick. Yeah, so this is basically where I kind of have my stop loss, just ahead of this overhead supply. I was considering putting my stop loss here because this is technically a supply area. But the reason I feel like we could potentially chew through that is because if you look to the left, guys, there's a ton of candles. So if I'm trying to distribute up here and continue to push price down, there's probably plenty of time, in my opinion, to get your full order in or your full close, talking about the big money, the smart money. So I don't think I'm too worried about this area. So I'm essentially just wagering my bets that will basically push through it. So I would expect some type of bounce from it, no doubt, even if it comes down a little bit. But ultimately, I want to be closing out right here just ahead of this overhead supply. So that's the one I'm looking for. And now I've got a fresh 30 days to play with. And then one last thing, guys, on my positions, I actually got into, and I know this isn't a stocks channel, but I did actually get into a Netflix trade. Don't forget, guys, for any of you that do trade stocks, we do have the stock box available. And, one thing I was noticing was obviously we had the earnings come out on Thursday for Netflix, and they were good earnings. But at this point, it seems like no matter how good some of these earnings get, we still get retracements. Okay. The market just wants more and more and more. So anyway, long story short on this, Netflix was given a pretty bullish +10 score on this thing. So just to take a look. And the reason I show this is because supply and demand works the same no matter what the asset is. Again, as long as there's liquidity, this stuff works pretty dang well. So just having a quick look at this, and then we'll get to you guys' ideas and things that you're looking for. Where is it? Netflix. Got them in order here. So yeah, we obviously had that big ugly pullback as soon as those earnings came out. And then what I was looking at on this, guys, because I did not have a daily demand down here, this just didn't look good at all from a daily perspective. So I actually bumped it up as far as higher time frames to a weekly. And this is why I was wanting to show you this specifically, because I was basically looking at this weekly demand instead. So this candle here, it's kind of a fat doji, if you will, but then we had our leg out, and then we did have a little bit of a gap. Okay, so on a weekly time frame, we did have a little bit of inefficiency in the market. Okay, there's our gap on a weekly time frame. Now, again, I don't trade gaps. I just like to see gaps ahead of the zones that I'm trying to pull from. So, I'm not going to automatically buy this just because it bounced into the weekly itself. Otherwise, I would have done it last week when it wicked in. So, for me, I just waited and looked for a little bit of a smaller time frame demand zone, and that's what I found. Now, I had two choices here, guys, and this is important. And this is the other reason I wanted to show you this price action specifically. Okay, if I just kind of zoom in here. So remember, the orange is my weekly demand. Okay, now within the weekly, I have 2 4-hour demand zones. So which one do I pick? How the heck do I know which one's going to work? Well, I don't know for a fact, and anybody that tells you they know for sure is probably lying or trying to sell you something. Okay, but for me, I'm not trying to sell you anything. I'm just starting to show you things that I've seen over the 12 years of studying these zones. So this demand zone is higher up on the curve than this one. Okay, we have a gap. We have a pretty nice gap from here to here if we're just isolating fair value gaps for a second, or I call them acceleration gaps because I think fair value gap's a dirty word. But that's just my taste. Okay, so that is a strong fair value gap. Okay, so why wouldn't I want to buy this demand zone? Why not? Well, the reason is quite simple. I want to get as close to the origin of the overall strong move up as possible. Because again, if this is a cheap discount zone, which it is, this is my $250 leather jacket at the mall, but down here's my $200 leather jacket. So I'm paying a little bit less. If I'm a bank, especially if I'm trading $500 million orders, I mean, you guys know that the banks trade gigantic orders. So this little bit of a difference of 50 points, 100 points, I mean, that could be quite gigantic in the grand scheme of a gigantic order from them. So the first inefficiency I see at the start of this overall strong move up is right here. This down here to me doesn't qualify as a 4-hour demand because all these wicks, all these candles, they all overlap each other, guys. That's an efficient market. This is my first inefficiency I see at the bottom of this curve right here. Okay, so again, find the gap, look for the unfilled order potential just below it. So that's what I did. I went ahead and popped in this order here, waited for a 1-hour close. And then it's kind of hard to tell on this, but we did get a little bit of a push up. So I'm in that, currently just a tiny bit of drawdown. But at the end of the day, remember, I've got my stop loss all the way underneath the weekly zone of demand. And I also took into account the 90 psychological level that we see over here, and I actually dropped it even a little deeper than that, so about 89.5. Okay, so I'm just trying to take advantage of as many odds enhancers as possible, not to mention the fact our 50 is above our 200 EMA. We obviously pierced the 200 EMA. Odds enhancers told me to buy it. Stock box confirmation, guys, so definitely keep that in mind if you are looking to play around with stocks at some point. And there we go. So I'm actually playing and in the game today. So that's a little update on me. Let's go take a look over here. And just as far as looking at just a couple other notes I wrote down over here, guys. We've already kind of went over the eco calendar today. The ceasefire obviously is on. The big impasse with the blockades, guys. I think that's probably the main thing right now is looking to see who blinks first. Nobody wants to blink first, but at the end of the day, it's all about, I think, the blockades. Okay, whoever lifts theirs first or whoever dies trying, right? So that's what I'm personally looking for. And then, just a quick thought on the Kevin Warsh. The Kevin Warsh confirmation hearings yesterday. I was chuckling pretty hard. I was actually watching a lot of it. I know it's pretty boring, guys, but it's entertainment at this point. Okay, watching these hearings and just politics in general, I still maintain it's like the greatest reality TV show there is. That's just the way I see it. Just if nothing else for the comic relief. But I was laughing because the senator from Massachusetts, she had basically asked him if he had disagreed with President Trump on anything. And he came up with a cheeky reply. And I just thought it was hilarious. And he said it with a straight face, but he said, I do disagree with him on one thing. He said that he thought that I'm out of central casting. And I think I think if I did, I'd look older, grayer, and maybe show up with a cigar. And of course, Democrat senator did not like that. It was kind of funny. So I just thought that was funny. But he did say he's not planning to be a sock puppet, guys. Okay. He is at least trying to talk like he is trying to remain independent and not just listen to every word President Trump says, or anybody for that matter. They're trying to keep the politics out of it just by listening to him. So he seems pretty legit to me, and I think he might come in and do a good job. So we'll see, guys. At the end of the day, all we care about is price action. It's good to look ahead at stuff like that just for longer term position type stuff. But as far as our shorter term trading, guys, day trading, short term swing trading, it's just all about price action. So anyway, that was my thoughts on that. Guys, let me know if you have any tickers you'd like me to check out. Yeah, Hugo, we got Christine Lagarde flapping her lips again later today. That woman has been on TV more than anybody I've seen lately, as far as all the speakers. So it's just quite interesting. They can't get her off the TV. All right, taking a look at Edge Finder over here. Let's take a look at our top setups. Still got our indices up in the bullish territory, but again, guys, kind of like what I went over yesterday, I just feel like they're a little overpriced right now. And I don't like, me personally, a whole lot of, if any, of the demand zones underneath, but we could definitely take a look at a couple of these. I've got, let me double check over here. Yeah, I got 14 minutes. So yeah, guys, just let me know what you're looking at, and I'll see if I can chart something for you. The German DAX is back on the list. That's got to be one of the most elusive items on the Edge Finder from what I've been paying attention to. It's not on there very often, and then when it is, it just seems like it's there for a short term. So I'm kind of interested in looking at the DAX. I'll be honest with you guys, I've never actually placed a trade on the German DAX, but again, supply and demand works the same with all the assets so long as it has liquidity. I did go ahead and put on an alert over here, though, for the DAX. I just pull up my other chart. Okay, always starting with the right side. Where's my trend? Trend is my friend. Got an uptrend. Okay, 8 above the 21 on this thing. So that's confirming on the mechanical side our trend. And then we have a look at the left on a 4-hour chart. I did identify this demand at, was that 23,618. So that is a zone of interest for me. Now there is a demand below. So Tiger, you just said, look for the demand zone. That's the closest to the origin of the overall strong move up. Well, yeah, but in this case, I think that all this, 4 or 5 days, 6 days of price action to the left, I think this kind of resets things a little bit. So if it resets because it spent quite a bit of time going sideways, which it did, and then we got the drop, to me, that swing low really starts here. Now, I will say I would be a little careful about placing a full risk on this. So, because we do have this other zone below. But I think I just like this picture. I think this picture is a little prettier. The gaps look better. You got a couple expanded range candles coming out of it. And there we go. So let me double check my goodies over here. Get rid of my McAfee. So yeah, that's the DAX over there. I know that's one we don't really jump onto a ton over here. But let's go ahead and take a quick look at the indices. Okay, we did get that, just tiny bit of risk on movement yesterday after that ceasefire announcement. But again, nothing really sustained, nothing really panned out except for Bitcoin, as Marco perfectly pointed out earlier. That's the one that's been the best. So as far as Bitcoin goes, because we are still getting that bullish signal over here, I do believe, right? Yeah, +9. It actually got a little stronger. I think we were at a +7 yesterday morning, but now we're at +9. So, yeah, I mean, everything's still looking good over here, guys. There's 2 zones I am paying attention to. Okay, if I just go over to a 4-hour over here real quick, So obviously swing low, swing high. You could argue on a smaller time frame, this resets it. So for me, I was actually looking at this as a little bit of a reset and looking at this as our swing low, swing high for our curve analysis. Okay, swing low, swing high, find our thirds. So we have a demand zone just chilling right here. This one was created toward the latter part of the Asian session. But here's what I like about this zone, guys. Okay, very little bit of time spent. Okay, we're talking 2 candles. And then when we had our expanded range candle move out, yeah, it broke structure, which is a requirement. Okay, it's a prerequisite. But also our expanded range candle, our leg out candle, that you can see the difference in activity and trading activity versus the basing candles, right? So I want to see this. I always want to see a yellow. I mean, even if it's a big candle, because sometimes these candles, even if they're green, can be pretty tall as well. Again, it's just all relative to the recent candles. So that's an example of what I want to see where the gap is. Okay, that's my gap candle. Okay, the fair value gap candle, the acceleration gap candle, right? Because this in effect is our gap right here. So this is the kind of pictures I like. When the candle leaves the basing structure, I want it to leave with force like that. Okay, because if it leaves like force like that, then perhaps they didn't get enough time to fulfill their order on a whale level, on an institutional level, that type of thing. Anybody in the chat? Say hello to me. I don't know if my chat's not working or not. Double check over here. Do I need to reset this computer over here? Give me a second to reset my computer, guys. I think the chat wasn't working. I just realized. Okay. About chat. Okay. Awesome. Thanks a lot. Kier. So yeah, guys, Bitcoin, definitely one of my favorite ones to look for a buy, but I just need a discount, guys. It's kind of flown up and away, pretty pricey right now. And it's awesome that we did break this structure over here to the left from Friday morning. So that's another +1 or another coin in my bag, so to speak, on this trade opportunity. But yeah, that's definitely what I'm doing. I'm looking at this as kind of the reset, and this is obviously kind of half in, but half out of the discount zone. So that's trade of the day for me, or I should say opportunity of the day, outside of the trades that I am in. So, and as far as that Kiwi dollar, guys, I made a shorts on this yesterday. As much as I would like to short this thing, I just can't because we don't have all of our ducks in a row. Okay, we don't. We've got, we've got a really nice megaphone pattern going on here where the tops keep getting taken out, the bottoms keep taken out, less liquidity sweeps. That's waking up higher time frame traders. But the challenge is over here on the right, we still have an uptrend. Okay, that's just the reality of it. Okay, we've kind of broken this set of structures over here. We have bounced into the daily supply, but again, just bouncing into a supply zone is not enough for me, guys. That's my number one reason to get into a trade, but it's not the only reason. The big puzzle. I got a list of about 7 or 8 or 9 things that have to happen for me to pull the trigger on any one trade. Ryan, yeah, you're asking about Bitcoin. Yeah, risk on move. I mean, when that ceasefire extension was announced yesterday, it came out of left field. So that was obviously good for the risk on assets like Bitcoin, like the indices, like a lot of stocks, because all he had said all week long was, "I'm not going to extend the ceasefire. I'm not going to extend the ceasefire." So all of us traders had it in our head that it's either going to be Iran's going to give up, either they're going to give up the blockade, they're going to sign on the dotted line, otherwise their roads and power plants get taken out, their bridges. That's all we knew. That's all the information we had. But then when we gained that new information, okay, just like that, oh, by the way, he's going to extend the ceasefire. Well, that's a sign of temporary peace, right? So temporary peace means a little bit of risk on movement in Bitcoin, in the risk assets, and then typically a little bit of reverse movement on the dollar, since the dollar unfortunately thrives on chaos and thrives on the war, because again, it's a risk asset. It's a safe haven item, right? Safe haven asset. So anyway, you know, and then by default, okay, because that's a good piece of temporary news, that's usually when things like oil drops. Okay, oil drops in a little better in times of peace. So yeah, that's just kind of the story on Bitcoin, and you know, kind of the related instruments, if you will. And then Aussie yen, I think that was the other one, the other short. Yeah, same thing, guys. So really, unfortunately for us, really. Oh, and we did just gain euro pound. Okay, so I'll take a look at that in a second. But when it comes to these bottom two on these bearish assets, we got a big, ugly blue box right there. Okay? You know, when it comes to these assets, if it's telling me to buy something, then I absolutely. Now, some of these can be red. I'm okay with that. And this may be different for you. It may be different for everybody. But there's a couple things that absolutely must be blue if I'm going to follow this very bullish score or this bullish score. Number one is the trend. Okay, the trend box has to be blue. That is the most important thing right there. I personally like to see that the COT, the sentiment's on my side. Okay, the COT report. Where are the big banks? Are the big banks also bullish this asset? Or are they not? Like down here, you see the Nasdaq, the Bitcoin, the S&P. Okay, this is just week-to-week change. So it makes me a little more skittish on things like this. But if I really want to buy it, perhaps I just drop the risk. That's the point. So for me, it's trend, it's COT. That's probably the main things I got to say. The sentiment. I'm really big into the sentiment and the trend. Now, I want ideally everything to be blue up here. But if it's a couple things like this, okay. Again, the whole point is we're looking for an aggregate. We're looking for all these items, as many of these items as possible in our favor. If we have a red box or two or three, it's not going to derail the trade idea. But for me, what will derail the trade idea is the trend. Absolutely the trend. So that's why I can't, in good faith, try to short something that's going uptrend. So let's have a look at euro pound, guys. I do have 4 minutes. That one just popped on the list this morning, and we'll see what we got. Okay. So automatically, I'm going to be a little hesitant on this just because our 8 EMA is still technically above the 21 EMA. So I would honestly like to see just price drop and then get that to kind of close further down and then retrace maybe tomorrow, guys. If we can get a close down here today, or maybe even Thursday, okay, then that would open up the opportunity for a day or two after that, in my opinion. Let's go to 4 hour on the left. Yeah, not to mention, we still got to chew through the rest of this demand zone I drew up. See, I don't want to short something that's currently in a fairly decent zone of demand or a very strong support level if you guys are, follow support more so. So just need a couple things to happen. Let's see. Here's what I would project on this thing. If we can get a push down, close below the rest of this, okay, somewhere in this area at least, and then get a close, and then we can look for a retracement. Okay, look for a retracement at that point for the sell. Now, just, again, going back to the shoot and pull analogy, trying to look a few balls ahead, this right here could potentially be that linchpin. I don't know it yet because it's too premature, but let's just say this red candle comes all the way down and gives me a nice expanded range candle down. Well, if that's the case, there you go. There's a little bit of a supply zone right there trying to form. Now, it's not formed yet because I need to see where this candle closes. But that's an okay area. If we go a little higher up, yeah, I'd probably actually go down a time frame or two. Let's see here. Let's go down to a 1 hour real quick. Yeah, maybe look at something like this possible 2 hour. I mean, here's another zone a little higher up the curve. Okay. That's a little higher up the curve, but again, it's just a little premature, I think, to write all this out. So yeah, we have a bearish signal, but I need it to close below this demand and then look for a retracement up tomorrow or Friday or, maybe even Monday. So that's kind of what I would see on euro pound. But yeah, other than that, guys, I'm just about out of time. I'm going to keep monitoring my footsie. I'm going to keep monitoring my Netflix, and we'll see what it looks like tomorrow. I think they're looking okay at the moment. And that's about all I got, guys. I'm slowly getting my voice back. I lost it on Monday for a while, but the last couple of days it's trying to come back. So I don't understand it. It's that time of year. It's allergy season, and it gets me every single time. So more lemon water is going to be in my near future. Take care, everybody. Have a good day. Stay safe. We'll talk to you tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.